So hi and welcome to the Day Trading for Beginners podcast. This is episode 23. And in this episode, we are talking technical analysis. So what I thought we would do for this first episode about technical analysis is talk about technical analysis versus fundamental analysis. And then we're also going to talk about this thing called price action, which we really need to understand as we move into sort of studying the whole realm and concept of technical analysis. So my name is Tyler Stokes from StokesTrades.com. I'm on a mission to become a full-time day trader. We started this journey in January this year. 4 months in, we just wrapped up a whole month talking and learning about options. And now we're moved on to our fifth month here. And I think for months 5 and 6, we are going to study technical analysis. So if you have not downloaded my 6-month blueprint, it outlines everything that we're doing in the first 6 months of this journey. You can find it in the show notes. You can go to StokesTrades.com/blueprint. So let's talk technical analysis. Again, we're right on schedule. We're 4 months in, and technical analysis, it's a big topic. So I think the best way to sort of talk about this and do our first episode about technical analysis is to really just contrast it or compare it to fundamental analysis. And then also talk about this thing called price action, which is really sort of an important, philosophy in technical analysis to really kind of understand it. I'm going to talk about it in a few different examples. And if you don't get it after listening to this podcast, I would recommend that you really just go check out some other resources and make sure you have a full grasp and belief in what price action is, and the fact that price action discounts everything. And we're going to talk more about that. But I would recommend that, if it doesn't totally click with this episode, certainly go out and find some other resources to help you understand what price action is. Now, before we start, just a warning. This is a big topic. So, we wrapped up talking about options, and I kind of mentioned in that previous episode that I've studied options for 4 or 5 weeks. And at the moment with my personal schedule, I'm able to do, a little bit during the day and then mainly on the weekend. So I'm not going to master options in a month. I'm just studying on the weekends. I feel like I have a good grasp on the intro to options, like some of the important concepts and components, but I'm certainly not an expert at options. And the same thing will happen with technical analysis. I'm hoping over the next 2 months to get a good base and understand the core dynamics, so to speak, about technical analysis. But really, this is a big topic. It's something that you are probably going to have to study for many years. Most people fail at trading because they don't put enough work and effort into technical analysis. It's a big subject matter. And not only does it require us to sort of learn some basic concepts, but you're going to have to actually trade in your paper trading account, actually study charts, actually do a lot of work and analysis and things like that before, you're going to get a good grasp on this and before you're ready to actually trade with some real money. So, not to discourage us, but just have some realistic expectations that we're not going to master this. At least I'm not in 2 months, just studying on the weekends. You might have more time where you can dedicate to, learning this stuff quicker. But for me, we're going to study this in the next 2 months, but I don't expect to be a master in technical analysis at that point. I just hope to have enough knowledge where I can start paper trading. So that's sort of like a bit of a disclosure there as we move into learning about this. Okay, so let's talk fundamental analysis first. And the reason why I think we should start here is that for me, at least, it makes the most sense for me and my, limited trading background. And I do kind of believe that, fundamental analysis, it's likely more familiar to most people, especially when you ask them about, investing. So when you invest basically for the long term, you're going to use fundamental analysis. You're going to study a company's balance sheet, its income statement and cash flow statement to sort of evaluate its financial health and its growth potential. So you're going to look at what the company's guidance is for growth over the next several years, the strength of their management, what competitive advantages they will have moving forward. So that's like fundamental analysis. And it's what, I've personally done. I own some stock and I own this stock in these companies because their growth and their outlook in the future based on their fundamentals for me looks really, really good. So the aim of, fundamental analysis is to predict the future price of a stock by determining whether it is, undervalued or overvalued. So this approach aids us investors in making educated decisions about whether to buy, hold, or sell stocks in order to optimize their potential profit. So it's long term. Now, if we sort of think about technical analysis, this is what we're going to be doing as day traders. It focuses on the very, very short term. So when you're day trading, which we are doing with this podcast, that's our end goal here, or, swing trading. So holding trades for maybe a few days or weeks. We're buying and selling stocks, over the course of minutes, hours, or just a few days. So it's very short term. And therefore our trading strategy requires this technical analysis. The fundamentals don't really matter. So you're not concerned with, the future of the company. And sometimes you might not even know anything about the company whose stocks you are trading. Many, day traders, they might trade stock in a company. They're not really familiar with it. They might know what sector it's in. It might be like in the energy sector or the finance sector, but you don't need to know the fundamentals of a company to trade its stock or to study technical analysis. And I think that's a big realization that I needed to understand that, the fundamentals, yes, they're important for long-term investing, but they are really not so important for technical analysis. Like if you're holding stock for just a few, hours during the day, the company's earnings report or its financial health, it's likely not going to impact your trading decision. So as a day trader, our focus is all about studying the past price movements of a stock along with the trading volume to predict future trends. So if we want to kind of go over an overview of technical analysis here, and we're going to talk about some of the main topics within technical analysis. And these are the things that we're going to discuss in future episodes. And this is like the framework of things that we are going to need to learn. So, technical analysis, what it does is it provides traders sort of with like a toolkit. Think of it as a toolkit for assessing market conditions and potential future movements, relying on the past and present data rather than like the intrinsic value of a stock. So you're not so much going to look at that, but you're going to look at these other things that make up technical analysis and what the tools look at. So the first thing, the big thing here is charts. So we're going to be studying and looking at charts. And these are, visual representations of stock prices over time. And they're going to help us see trends and patterns that might not be obvious from other types of data. So that's really a big one. We're going to have a whole episode and future, YouTube videos again. So subscribe to the YouTube channel. Many chart videos we will certainly be posting on our YouTube channel. Charts are important. So candlesticks are sort of a type of chart. It shows the high and the low and the opening and closing of a stock. So candlesticks, understanding how to read a candlestick, and then the patterns within each one, that's going to be something really important that we're going to do. I'm going to draw these out on a whiteboard through video format. So again, check out the YouTube channel for that. So charts, candlesticks, volume. So volume shows the number of shares that are trading within a certain period, and that's going to affect the prices of the stock moving forward. So when you study and you're looking at how many people are selling during a specific time, that is something that you will be analyzing. Time frames are also important. So these refer to like the length of time that you might be looking at a chart. So you can look at like the daily chart, the weekly chart, or the monthly chart, or longer time periods to kind of look at trends and see if there are any patterns. And price action, we're going to talk more about price action on this podcast. This is like the method where traders focus solely on the price movements without using any other indicators. So you're looking at the actual movement of the price of the stock, the action, the price action. Patterns and trends are going to be really important to understand, to be able to spot these and to be able to take action when you see patterns or you're noticing trends. Again, these are like shapes and movements in charts that signal the potential future price movement. So that's really what you're doing with technical analysis. There's a whole bunch of things called indicators. So these are like tools to analyze past market data to help you predict future price movements. There are things called moving averages. So these are like a line that sort of smooths out the data points. So it's like an average of the price over the past, 10, 50 or 200 days. So, that's a data point or something you can look at on a chart, and it's going to help you make decisions. And support and resistance. So that's a big one. It's one of the ones that are a bit more easier to understand, but there are price levels where, the stock might rise to this area and repeatedly, touch the area and not be able to rise above it, or it'll fall to an area called support where it touches down support and, continues to rise up. So support and resistance is really important to be able to notice on a chart. So those are like some of the most important things that we will be studying in this whole concept of technical analysis. Now, I wanted to, wrap this up by talking a little bit more about price action. And again, I'm going to do it with some examples that I found useful for me, but I will sort of, mention that this part of the podcast, I might run on a little bit or explain things over and over or in different ways. And it's just me trying to fully understand price action and hopefully giving you some information where you can hear it a few times and grasp this concept. In chapter 1, there's this popular book that's recommended a lot. I'll have a link to it in the show notes. It's called Technical Analysis of the Financial Markets. It's the second book that I've actually purchased so far on this journey. I purchased a textbook for options, and then I purchased this textbook for technical analysis. It's very popular. But it talks about the philosophy or the rationale of technical analysis in the first chapter. And it mentions these three things. So price action discounts everything. And we're going to talk more about that. So that's an important thing to really understand and believe when you're using technical analysis. Price moves in trends. So that's important. And then history repeats itself. So I have been also following this person on X called Tesla Tracker. And I've learned a lot over the past several months. He has posts where he talks about price action. He's been super accurate in detailing and making price predictions of Tesla up when it was 240. I actually sold stock when it was 240 and rebought back in when it dropped down to about 140. Not a lot, but just a little bit. But he's been very accurate. And then in terms of this philosophy of price action discounts everything, he had this post on X where he replied to someone who said, this person said that if today ends up green, it's very unlikely that we will see a price of 152 next week, in my opinion, unless we have some insane news this weekend. So this person, Tracker, actually replied to that. And I'm going to read you his post verbatim. And then we're going to talk more about this whole notion of price action discounting everything. So again, this person wrote that they felt like, in their opinion, the price won't get up to 152 unless there's some crazy news event that happens over the weekend. And here's what Tracker replied to. He said, "People keep telling me price change requires news. And I'm trying to educate you that price action is a factor of sentiment in the market participants. The media doesn't trade stocks. They just report after the fact. News follows price action, not the other way around. The words and opinions of people who aren't buying and selling simply don't matter. At the end of every day, all that matters is what people who trade, people who participated in the market, felt was a good enough price to buy or sell that day. You add up all the sentiment over time across millions of shares traded, and you get the price action of the market. So, to kind of break that down, what he's really saying is that, many people think that news stories cause stock prices to go up or down. However, it's actually the feelings and opinions of those who buy and sell stocks that mainly affect the prices. So the news usually, talks about these price changes after they've already happened, showing, that stock prices often change before the news reports them. So sometimes stock prices, might drop a bit, which helps traders guess where prices might go next. But it's important to pay attention to what the actual traders think and do, not just people talking about the stocks. Every day, the main thing that matters is how much traders are willing to pay for stocks based on how they feel about them. Over time, these feelings add up and are shown in the stock prices that you see. So this is what we mean by sentiment. It's like a big group feeling about the stock. So that was in a reply, and I needed to read that over a few times, and it made me sort of dive a little bit deeper into the definition of price action, and then this concept that price action discounts everything. So I wanted to kind of continue on down this sort of rabbit hole. So, price action is the way a stock's price moves up and down over time. That's what price action is. It's the price of the stock moving up and down. It's what you see on a chart showing whether the stock price is rising or falling or staying the same. So it's the action of the stock. So when we talk about price action in technical analysis, we're focusing on the actual movements of a stock's price on the chart. So this includes, every dip, rise, or flat line that you see when you look at a stock chart. So technical analysis analysts, what we're going to be doing is we use this visual information to try and figure out what might happen next with the stock's price. And here's, how these technical analysts, who we are going to become, view price action. So first, it's viewed in terms of understanding sentiment. So price action is like a story that tells us how traders feel about a stock at any given moment. So, if a stock's price suddenly jumps, it might mean that a lot of people are optimistic about the company's future. Conversely, if the price drops quickly, could indicate that, traders are worried. And then, in regards to charts and tools, charts as one of the most important tools, what we're going to do as a technical analyst, we're going to use different types of charts to study this price action, to study the changes in price. These will be like line charts, bar charts. We've talked a little bit about candle charts and whatnot, which are going to show the prices as they close, as they open, and as they change. And then every change in price, it's going to tell something about the market's mood. Analysts, they look for patterns in the price movements that have occurred in the past, or to do that to predict what might happen in the future. And this could be identifying a repeated pattern that might suggest a price might go up, or a pattern that might suggest that a price goes down. And then this concept that price action is current. So the main idea, or a key idea in this technical analysis, again, is that price action reflects all the available information about a stock. This means that, whatever is publicly known about the company's financial health, market conditions, and other factors is believed to be factored into the current price. So that last point there, price action is current, or, price action discounts everything. So whatever is known, it's already reflected in the price. So by focusing on just studying the price action, basically what we want to do is we aim to, make educated guesses about the future movements based on how prices have changed in the past, or how they're currently changing, rather than getting, bogged down in all the specifics of the company's financial details. We're not going to look at that sort of stuff. And again, this approach, based on the belief that the price itself, as it is shown on the charts, is a direct reflection of everything affecting the stock's value. So I was hoping that might have sunk in. I've got more to discuss here, but hopefully that makes sense, that explanation there. And again, you might want to come and actually read this for yourself. In the show notes, I'll have a link to this reference, and you can actually check out the actual X post on Twitter from that I was referencing there. But to kind of dive even further on this whole notion of news and price action. And the reason I'm talking so much about this is that it was hard for me to believe that things aren't affected always by the news. So, technical analysis, it focuses more on the price action and patterns observed in charts rather than the timing of news events. So it assumes that news and events are already reflected in the price movements. And by analyzing these movements, traders can identify potential trading opportunities. So it's not so much that you're going to wait for news events and take action before or after you're expecting a news event to happen. You just look at the price of the stock and everything gets factored into that already. And you're just going to analyzing the price action and analyze what it's doing, how it's moving, past trends. And that's what you do. You don't have to get bogged down by keeping, a pulse to every single news event that might be happening. So I think that was just a harder thing for me to sort of totally believe in and realize. So in terms of like this whole news versus price action, there's this immediate reaction idea where technical analysts basically believe that the stock market is incredibly efficient at processing information. So when news is released, the reaction to it, whether positive or negative, it's almost instantaneous in the stock prices. This means that, by the time most traders have heard the news and can react, the price is already adjusted to reflect the news. So it's not that, these analysts think news won't affect stock prices. It's just they believe that by the time they could act on it, the price has already incorporated the news. So, therefore, technical analysts focus more on what the price action shows rather than the news itself. So they look at how prices have moved to understand the market sentiment and predict future trends, as opposed to, what they feel a news event might do to a stock. And then there's, the market sentiment and psychology aspect as well, where, technical analysts often pay close attention to market sentiment, essentially like the mood of the market. They're thinking the market. A lot of people say, before you do anything, what kind of market are you working in? Market first is often a phrase that you might hear when you're researching technical analysis and day trading. And so even if the news is, objectively bad, if the market sentiment remains really positive, then the price, may not drop as much as one would expect. And then on the other side, even good news might not lift a stock that's stuck in a negative market environment, like a high interest rate environment, and you got good earnings. Maybe, the stock doesn't move. So market sentiment is important as well. So, just a random example here. If you imagine that a company announces unexpected high earnings, which is generally good news, you might expect the stock price to jump. However, if the price had been, rising significantly in the days or weeks leading up to the announcement, it might not jump much further when this news breaks. And this could be because the market participants, they anticipated the good news and brought the stock, the good news was already sort of priced in. You might hear that term. It's already priced in advance. So when the news officially is released, the reaction might be, kind of muted or sort of flat because it's already priced in. So, just to wrap up talking about news and price action, for us day traders, or, we want to be technical analysts, the key is not just the news itself, but how the market reacts to the news. So by studying the price action, then what we're going to do is we're going to try to understand the underlying market sentiment and then make trading decisions based on the expected future movements, rather than reacting to news after it's already influenced the market. So this approach, it helps us focus on what we can see and measure, the price movements, rather than just speculating on news itself. So again, just to wrap up here, and I hope this has been useful. I know it might seem like we're sort of repeating ourselves a bit, but it's important to really understand this before moving forward, that price action discounts everything. So this idea that price action discounts everything allows technical analysts, so it allows us as day traders to focus directly on charts and models to guide our decisions about trading, relying on assumption that all of the necessary information, it's already embedded in the current price level. So again, by looking at the charts and the models to help guide our decisions, we're relying on the assumption that all the information is already priced in to the price, and that's all we need to look at. So, we are going to believe that anything that can possibly affect the price, fundamentals, political stuff, psychological, or anything else, it's already factored into the stock price. This includes historical data, current events, and everything. We're going to run through this market efficient concept where it aligns closely with this whole efficient market hypothesis. And again, that suggests that stocks always trade at their fair market value, making it impossible to consistently outperform the market through traditional stocks. But technical analysis, what we're going to focus on is price movements and patterns to make our trading decisions, rather than trying to assess a stock's intrinsic value based on other types of data point. And then this focus on price movements, since the price is thought to reflect every factor that can influence it, technical analysts, we're going to spend time analyzing how prices have moved in the past and how they are moving now. And again, this approach assumes that patterns will often repeat themselves or continue in a trend because they are driven by the same human behaviors. And so that's the other point, that history repeats itself. Price travels in patterns, and then the price, everything is already discounted in. And by relying on the premise that price action discounts everything, we can simplify our analysis by just focusing solely on the charts and on volumes. And again, this eliminates the need to digest vast amounts of fluctuating economic and financial data on a daily basis. So you don't want to get overloaded with market data. In the first chapter of the book, Trading in the Zone, we talked about this in a previous podcast. Market analysis is something that people start looking into even more when they're not trading very well. But that's this whole notion of paralysis by analysis. Too much information is probably not going to be good. And specifically with, doing technical analysis, you don't need all that external market data points. It's just going to be not particularly useful, or it's going to inhibit some of your trading decisions. And then, technical analysts, again, we use the principle to justify the predictive nature of their methods. So we're going to argue that if price movements incorporate all relevant information, then studying those movements can provide clues about future trends. And that's really, the main focus point on this whole price action discounts everything. And it forms the core of technical analysis, and it enables us to concentrate again exclusively on the charts and the price movements. And again, this approach is built on the assumption that all the relevant information, whether public or private, it's already factored into the current prices. And by analyzing, patterns and trends directly from the charts, we basically strive to forecast future market behaviors. That's what we want to do. And that's how we will put on trades and make money. And by doing that, we're going to make, informed decisions without the need for any external data. So again, this method emphasizes the belief that the key to successful trading lies in understanding the signals the market provides through price movement. So again, I hope that that was useful. I know that I sort of went on and on about it, but for me just to kind of go over that last point there, technical analysis, it emphasizes the belief that the key to trading this way lies in understanding the signals that the market provides are within the price action. So price action discounts everything. Everything evolves from that. And then you study, you use your technical analysis toolkit to sort of study that different price action. So I think we'll stop there. I hope that was useful. Again, this is our first sort of introduction to technical analysis. And I guess the main goal here for me, kind of talking quite a bit about price action, is just if it didn't click, if none of that worked, if all that just sounded like a foreign language to you, then spend some time maybe going through some YouTube videos or some textbooks or just some websites and really trying to grasp this idea of technical analysis. And before moving forward, just have a belief that price action discounts everything. Prices move in trends, and then history repeats itself. Because if you don't sort of believe and are aligned with that philosophy, then you're not going to be able to do technical analysis, so to speak. So I think that's really important. And I hope that I sort of drove home that point. I hope that that was clear for you. And I think we'll wrap up that as our first sort of episode into technical analysis. So again, that was our first one. That's what technical analysis is. And I think moving forward, we're going to have episodes and we're going to focus on everything from charts, candlesticks, volume, moving averages, support and resistance. And I'm going to figure out exactly what I would personally want to learn next. And that is what we're going to talk about in the next episode. So thank you so much for listening. Below in the show notes, again, you can download that 6-month blueprint. You can also come over to our free community on School. All these podcasts and videos that we create, they are up there as free courses, and you can interact with us on the platform. Many more people are coming over. People are starting to introduce themselves. It would be great if other people can share their journey towards becoming a full-time day trader. Again, you can sort of observe everything in private if you wish, but if you'd like to sort of share your story and share how you are progressing as a day trader, then certainly come over to that free group, and I would love to speak with you and hear from you there. So thanks so much for listening. Subscribe, and we will talk to you in the next episode.